Earlier this month, let's say May 5, the crypto asset Terra USD, also known as UST, traded at $80 a coin. On May 7, UST, which was pegged against the US dollar, started falling on all crypto platforms across the globe. On May 9, its value had fallen to 35 cents after a massive sell-off. Luna, another crypto coin that also backs UST, that is, by buying into it if needed, lost all its value and fell to almost zero. As a result, UST investors lost almost $45 billion in just a matter of days. This let-off in one coin triggered a broad sell-off in the crypto markets globally, and investors started pulling out of their money from crypto assets and putting them in safer ones like gold. Repercussions of the UST lunar crisis were felt globally, and many exchanges temporarily suspended deals in the assets, while some even delisted the stressed coins, that is the UST and Luna, from their platforms. Today, we will be analyzing Terra Luna crypto crash. And this is Business Edge. I am Lekon Onobanjo, standing in for Tolulope Adelere Balogun. Joining me from London, UK is Atose, founder and CEO, Koinkoin Exchange. Good morning to you, Ola. Thanks for joining us.
Yes, very good morning, Lekon. Thank you for having me.
Beautiful. So let's have a bit of education now. What does it mean, or what actually is the difference between a stable coin and somewhat an unstable coin?
Well, I guess I should probably start by saying there are no such things as unstable coins. Wow. And, stable coins, as you put them, are typically pegged to a currency. The preferred currency, of course, being the US dollar. So by stable, we mean it will be worth $1, at all times. That would be its value. And it gets that value typically by the company that offers it would typically hold reserves in cash, US dollars, of course, or bonds or something of value from the traditional, either currency or money markets. So that's normally what a stable coin is constituted of. So typically, the most popular one is USDT. Less popular and partly regulated by the US Congress is USDC. Another one is BUSD. These are, standard, stable coins, if you like. And what we would call investment grade coins, not necessarily unstable, coins like Bitcoin, Ethereum, and others where, you could potentially buy these coins at a certain value and wait for it to yield more in value as it does over time. But then that's a double-edged sword, and it can go either way. So, of course, that would be the other type of coin, to put it simply.
So there seems to be some sort of a piggy relationship between UST and Luna. So I'm wondering, how is that possible since one is thriving off the other to exist?
Right. So this is the thing. I mean, something that everybody kind of got wrong is, and if you speak to the industry experts, UST, which is the stable coin, created by Terra Luna, is not a stable coin as I've described it. It's a algo-backed stable coin, which means that it's a stable coin which is not necessarily backed by hard currency at any given time. It's backed by algorithms which are dependent on real value, right? So what that means is the peg is guaranteed if certain parameters set by the algorithm are met. And that's largely what that means. And just to, correct, one of the points you made earlier, the markets generally were selling off, and this is due to inflation pressure, the rates being raised by the Fed in the States. Markets across the board have been selling off for the past few weeks. We saw NASDAQ, the Dow Jones, both selling off quite a lot over the past few weeks. And of course, these things are cyclical. When those markets sell off, typically crypto follows, right? So Bitcoin has sold off, everything was selling off. So I missed the sell-off on the 7th of May through to the 11th of May. The UST, lost its peg. So what that meant was what was supposed to be worth $1 based on the algorithms and based on the value put in by a number of, institutions, lost its peg. That was due to initial selling pressure. Anything can be sold, whether it's a stable coin, whether it's an investment grade coin. But unfortunately for UST, the selling pressure was too much and it couldn't hold its peg. So what that meant was those who put money into Luna, which is, the Luna coin, and those who backed it from an institutional perspective, decided to pull their money out at the prevailing value of one UST, to one USD. And from there was a slippery slope. So in essence, what happened was some people began taking out money, some institutions are taking out huge amounts of money. Again, this wasn't any attack. This wasn't, the view that's been given so far. This wasn't from any attack or anything like that. Investors simply pulled out their money. And one investor left, another one left. And of course, the retail holders of the Luna coin who invested at an earlier point, didn't see this coming, of course. And they were left, holding a bag of Luna coins, which ultimately, lost all their value.
All right. Well, Ola, now central bank digital currencies, according to the trends that we have, are being introduced to so many countries now. But then looking at the trends, there seems to be some sort of low adoption now as compared to the UST. So we're asking, why is that so? Is there some sort of fear or skepticism that has been expressed by the would-be or so-called investors?
Well, it's really strange that you should ask. I think they're still at their early stages, right? So the central bank digital currencies, like the eNaira, for example, the ECDs coming out of Ghana, which is currently being tested right now, and some other countries are sort of introducing. China's got theirs. Everyone's sort of looking to introduce a digital currency. Now, a digital currency from a central bank will still have, the same. It will still basically be governed the same way fiat is governed today. So what do we mean by that? So fiat, as you know, is governed by central banks. They have the authority to print more money or release more money into, depending on, what's going on in any given economy. If it's crisis level, for example, more funds can be released, or if there's a need for tightening, the rates could be raised. So in essence, central bank digital currencies are not like, traditional digital assets or cryptocurrencies, if you like, in that cryptocurrencies or privately issued tokens offer, certain, benefits. In some cases, you have things like staking. You have decentralized finance, lending via decentralized finance. Some of these coins have burnt over time. Some of them have a finite value. As you probably know, Bitcoin has a finite value, a finite volume, of ultimately 21 million. So where you have coins which are limited in their volume, the value will ultimately continue to go up as long as there's investment in that coin. So that said, people are more likely to say, hey, if I buy some Bitcoin today, maybe in a couple of years' time, it's going to go up in value and I'll make more money. That's not the same with central bank digital currencies.
All right. Now, Olaf, of course, you are an expert in these sort of conversations, but then for the benefit of those who are not aware or who do not know what it means, can you just educate us who a token holder actually is?
Sorry, a token holder?
Yes.
Well, I mean, a token holder, it's someone who decides to use their value, their money. So you could take your Naira, your dollars, your CDs, your, a Rand, Kwacha, whatever you have, and you use it to buy, tokens, which you can do on a variety of exchanges, including ours, right? So you take your money to an exchange, you make a deposit, and you choose to buy a coin at the price at the time. Once you buy those coins will sit in your wallet, which could be centralized on the exchange you buy them from, or you may choose to transfer them out to a mobile wallet, which you could buy or choose to buy. The moment you do that, you become a token holder, and you become someone who's holding a coin. So ultimately, your view and the view of most token holders is they will hold for as long as they can to see the value of that coin go up. Once that happens, they make money.
Now, looking at the Terra Luna crypto, could the crash have been avoided? Looking at the parameters or the factors surrounding that, could the crash have been avoided in any way?
So what I would say is, if you mean the crash across the market, I think with crashes, as in all things, as I mentioned earlier, you have cyclical events. So you will have times where markets rise and then markets fall. This is something we see across all market types, right? So you will have that experience where markets fall and markets rise. This is just something we can't get away from. This is how the industry, markets work that way, right? You have the ups and you have the downs. If the question is, could Luna have prevented this sell-off? Or the depegging, right? So, the depegging of the stable coin from Luna. There are a number of precautions they could have taken, I would say. And, I know going forward, they've created a new chain. They have what's called Luna Classic now, and they're trying to obviously market that. I mean, again, we would not advise anyone to buy it or get involved in any token, but that's what I know they're doing. My personal view would be to prevent this from happening is the institutional investors in Luna, they began to sell off in huge volumes when the market came under pressure. By that, I mean the entire market, not just the crypto market, but all markets. So they lost faith and they pulled out, and they pulled out heavily, right? When that happens, of course, a commodity or a token could lose value. The only way you prevent that is you have to have either a cliff, if you like, whereby people that invest, offered certain guarantees. That's either based on, the reserves held by the company itself, or perhaps not using algos and making sure that your stable coin is always backed by cash reserves, right? So those are the two sort of, ways that you could ensure that you don't have this hard sort of sell-off that we witnessed, in Luna, with Luna finally going to zero.
Okay.
So that's the way you would look to prevent it. That said, the token issuance of tokens, if it's heavily regulated, there will have to be a remit to how much can be sold to the public, what sort of information has to be provided before the public get involved, so they're not sort of, left, if you like, as scapegoats to what the larger institutions choose to do when they choose to sort of, draw down, their position in these coins. Okay. So again, the UST Luna is a unique instance.
All right, well, we get to look at what sort of regulation exists or pre-exists in Nigeria and try to tie the conversations together. But then, Ola, just get to stay with us, and I will be back with you in a bit. Now, the Terra USD stablecoin was not so stable after all, and has thrown lots of investors into panic mode. According to details, millions of dollars have been lost, and consequently, the USD had been delisted by crypto exchanges like Binance and OKX in an effort to protect customers. Well, a lot of people are actually scared, but then we'll continue with the conversation after this break to know if these sort of investments are actually viable in the first place. We'll be back in a bit. Do stay with us. Still with me is Atose, founder and CEO Koinkoin Exchange, and we have been analyzing the crash of the crypto coin, that is Terra USD. So back to you, Ola. Looking at the coin now, would you consider investment in stable coins low, medium, or high risk? And if you are going to advise anyone who would be wanting to step into that terrain, what advice would you give to help the person stay afloat and probably just avoid a bit of shocks that has been experienced within that crypto space?
Yes. So again, I think just one point to make: the exchanges, or a number of the larger exchanges, actually delisted UST and Luna, but they then came back and relisted these coins. So there is continued interest in this space. I would say there is a continued interest from a number of different parties, both institutional investors and retail investors, in stable coins, of course. My view personally is, before investing in anything, try to understand, the underlines of the token, what's really going on with that particular company who's offering these tokens, and try to understand a little bit more. Don't just follow the sort of hype in terms of everyone's investing. I might as well sort of go in and invest as well. So my view would be to try to understand a little bit more about the company, try to understand, the fundamentals of the token, and see if it's actually worth, investing. So that would be my view.
All right. Now, you talked about sellouts the other time. Now, looking at the blockchain, now, would you say, or would you blame the blockchain for the relative ease on sellouts and cascade that is actually occurring within the linking of the digital assets?
Well, I would probably say, we have what we call a contagion, right? It's typical in any market. If any market suffers, no matter what asset class it is, if you have even in equities, if you see one particular, share or stocks of a particular company sell off heavily, you could have a contagion in the market where, all assets or other assets start to sell off as well. Now, in terms of the stablecoin and Luna, we did see some of that. We felt there was a bit of contagion. There was a total of $60 billion wiped, from the market purely, based on Luna. And UST, and as a result, of course, a number of investors were spooked. Some are still spooked, and understandably so. And as a result, you do see this sort of contagion in the market where, other assets start to sell off. But that said, as of this morning, we note that Bitcoin is above 30,000 again, and we're seeing sort of, double-digit rises across the altcoin market as well. So, I think the interest in cryptocurrencies and digital assets is here to stay. And given what we, given where money markets are, and given the very technology, the blockchain technology behind crypto assets, I think the interest will continue to be there. In fact, a lot of investors now see, digital assets as currently being cheap and undervalued. As a result, a lot of institutional investors are actually piling in, and they're buying it up. So that's really what's happening. There will be sell-offs in the market. There will be times where we see sell-offs, and there'll be times where the market's bullish, and of course, you can expect investors to try to take advantage of either side.
Yeah, so let's go back to the discussion on a regulation. Now, the Securities Exchange Commission newly introduced a set of guidelines based on the operations of cryptocurrency in Nigeria. Now, would you consider that as being robust enough? And what do you think, how do you think the Nigerian regulator should have reacted to the crash in the first place?
Well, it depends, right? If the regulator is to react to the crash of Luna specifically, the regulator would have to understand, which of the exchanges are actually listing Luna where people have actually invested, and which of those exchanges are actually operating in Nigeria. So that would be the view of the investor, to initially understand that. In terms of regulators generally, well, my understanding is, I mean, Luna, given that the company is a South Korean company owned by a South Korean, the South Korean regulators are, scrutinizing the, token issuance industry a lot closely. They're looking at exchanges a lot more closely with a view of introducing perhaps stronger regulations on how to prevent this and obviously how to protect the retail investors, in the short to long term. So I think, the investors need to try to understand the space. The space is still new. Obviously, there's a lot to be learned from what has happened. There's been a full post-mortem carried out. That information, I believe, is available online. So there is an understanding of what's happened, what can be done to prevent it going forward, what regulations can be put in place to ensure that, token issuers have sufficient reserves to ensure there isn't sort of a runaway loss of peg, for example, and then loss of entire value of a coin. I think there's a need for regulators to be able to establish that.
So finally now, we understand that deposit insurance is being provided for customers to actually prevent, most especially investors, their funds in this sort of investment. So do you think such should be provided for crypto assets too? Quickly, just 1 minute or two.
Well, because the nature of tokens or digital assets are very different, I would probably say it's too early to make a decision on that at this moment in time. But again, I say going forward, the regulators would need to look very closely at who's issuing the tokens and if they have the relevant background to do so and what sort of protections they're offering to prevent these kind of scenarios from happening again in the future.
Thank you so much, Atose, for being such a lecturer and an educator on the show this morning. Really appreciate your presence.
Thank you very much, Lekon. Thanks.
All right. So Terra Luna has relaunched with Luna 2.0, a new token, according to reports. But blockchain experts say it would be only sensible if the company is going to establish something stable that is backed by volatile assets, and it is important that they set it at a ratio that is of a high collateral to actually absorb shocks, and save customers from losing their entire stock. Maybe something in that nature will be done. But then there's one thing we'll do. We'll run off on a break right now to return with NC4 to watch. Do stay with us. On NC4 to watch, let's take you through the top 4 trending business stories. We start with South Africa's rand. Now, the South African rand firmed early on Monday as the US dollar weakened ahead of a slew of local economic data in the coming days that could give clues on the health of the economy. At 06:15 GMT, the rand traded at 15.54 against the dollar, 0.38% firmer than its previous close. Let's take you to the Horn of Africa. The National Bank of Ethiopia has begun tweaking the country's banking regulations in a move aimed at allowing foreign banks and fintechs to start operations in the country. Some of the changes in the banking business proclamation include setting the capital requirements for foreign banks seeking to expand into Ethiopia through joint ventures. Now, Sauda Kazim Msemo is resuming to the office as Deputy Governor, Bank of Tanzania, after being appointed to that position by President Suluhu Samia Hassan. This appointment takes effect on June 1, 2022. She becomes only the second woman in the country's history to serve in the position. Msemo previously served as Commissioner for External Finance, Ministry of Finance and Planning. She takes over from Dr. Bernard Johanna Kibese, who has been appointed as ambassador. Now, crude oil prices rose on Monday, hitting their highest in more than 2 months, as traders waited to see whether the European Union would reach an agreement on banning Russian oil imports. The Brent crude futures contract for July, which will expire on Tuesday, was up by 47 cents, that is 0.4%, at $119.90 a barrel at 06:59 GMT, after rising as high as $120.50 earlier in the session. The August Brent contract, which is more active, rose 61 cents or 0.5% to $116.17 per barrel. And that's all on today's edition of Business Edge. Do not forget that you can download our mobile app on App Store and Play Store. Visit our social media platforms at New Central TV. And of course, you can also visit our website, www.newcentral.africa, for more stories there. My name is Lekon Obanjo. Have a wonderful money-making Monday.